Yeah, Thursday, 2/22/18. Thursday, February 22nd. Hope everybody had a great trading day yesterday. I am your host, Chuck Fulkerson. Welcome to the Daily Market Commentary. We are going to do what we do each and every day here on the commentary. We're going to take a look at the market from a technical perspective, identifying potential turning points and breakout trades to learn a little bit about how markets move. One of the things to remember if you're new to the channel, first of all, thanks for watching. Please make sure that you hit the subscribe button below. And also tell all your friends. That'd be cool. We don't ever get rid of the lines on the charts unless we are doing it live and in front of you. I think it's important for everybody to see how these levels hold true and how they eventually wind up working out. So let's go ahead and dive right in. So Nasdaq this morning, the S&P this morning, we're up about 9.5 points. We had a very strong drop-off yesterday after some economic news came out. That pulled us back really hard, but not back quite far enough into our entry. So I would call today moving day. I want to see if we make it down to this area here and then boom, pop up out of here. I think that we're in a pretty pivotal spot right now because we do have higher swing highs and higher swing lows on this 4-hour chart. Once we got above this swing high, I felt like, okay, it was safe to believe that Volageddon had ended and higher swing highs and higher swing lows. However, this lower swing low is slightly concerning. Our momentum has definitely waned. If I move to a momentum chart, you'll see that our momentum has fallen off the cliff. But we are starting to kind of come back up. And I use the 4-hour chart. You know, a very good friend of mine, Sam Evans, calls this the Goliath chart, right? So I use this Goliath chart, if you will, to kind of give me an idea. And I really used this pivot high. Once we got above that pivot high, I said, okay, now that we've got a higher swing low and a higher swing high, it's okay for me to kind of go back into that bullish mode. But I think right now we could just wind up basing for a little while, which is not a bad thing when we're basing, if you understand how to play options in a basing environment. So may or may not occur. As far as, let me go back to my normal style here. As far as your overall positions that we're going to look for in the S&P, I wouldn't really change much of what we have lined up. I think these are both still pretty good areas. I feel like if I shorted up here, I'd be forcing things a little bit. There was no way that I was going to predict this high, although it was a pretty good area that we had fallen from in the past. Didn't really want that there. Sorry about that. It was an area that we had fallen from in the past, and I had felt like I wasn't willing to take another shot at it. Obviously, the market doesn't care what I think, and that's what we always have to remember. And it fell from there pretty hard. Now, we are getting a rally, fair amount of strength, but I will say that on the hourly chart, I'm a little concerned with these upper wicks. And these upper wicks tell me that since London opened, we've been unable to hold on to highs in the hourly chart. We're closing off of the high. For those of you that use a lot of indicators, closing off of the high is typically a sign of an overbought condition. If you're an indicator guy, closing off of those highs is really where you start to see your overbought conditions kind of coming in. So just keep that in mind. I always look at wicks because wicks tell me a lot about what's happening. So I'm going to leave the areas as we have them for now, and then let's go look at the next areas. So in the Nasdaq, we came really close to our Nasdaq entry. Didn't quite meet it. And then it sold off as well. So I'm going to leave the area that we have displayed there in the Nasdaq. I think it's still a pretty good area, something that could very well still be used. I don't necessarily want to use this area down here yet for a long, and so Nasdaq, I'm going to continue to do the exact same thing with the S&P. Sit and wait. Crude oil. So yesterday we had a little bit of a move off of this crude oil position. You may or may not have taken some profits on it. You may have been stopped out on it. It's really one of those positions where it entered this area here, came screaming right back down to what was the opposing fair price value area all in 1 hour. It was a very quick move. Now, obviously, that level is no longer valid. If you didn't take profits, then you probably got stopped out on it. So, and that's why, as much as I love the set and forget it style of trades, I like alerts much better than anything so that I can really determine what it's doing on its entry types. If I can get a better view of what it's doing on its entries, that's really the better way in my mind to go and to see where's the opposing fair price value area that I can get in. And not everybody can do that. I understand. It depends on your schedule and what your life is, but it's just something to consider. Now, what I feel like we're putting in right now is on the 4-hour chart, we've got the makings of a downward trend, and we're putting in a lower swing high. So this is a good opportunity to look at candle-to-candle style of trading. And if we get below our current candle's low, it might be a chance to get short on the entry for a candle-to-candle style of trading. Remember, your stop would go just above this area here. So I'm going to change this to a green. Excuse me. I'm going to change this line completely to our breakout style line. Now, depending on when you look at this video, it may have already moved past this area, so I'll try to get the video out fairly quickly. Most of you have said you like the videos in the mornings, although a couple people did say they like them in the evenings. I love you all dearly. I'm not doing this twice a day. My schedule's hectic enough. Taking a look at our bond position. So our bond position has met entry, continuing to move down. So let me know in the chat box down below if you were able, in the comment section, if you were able to catch any of this bond trade. It's still running. Now I think is the time, now that we've put in this swing high right here, it's a good opportunity to take your stop and move it down, lock in a little bit of profits. The Aussie trade still rolling as that keeps moving. Same thing with the Euro level. And yesterday we had a Euro trade right here. We had a Euro trade set up right here, which we removed, and we chose to remove that trade because of the way that, actually it was a little bit higher. Hold on one second here. The Euro level that we had yesterday was here, and we chose to remove it because of the way that it was entering. Chop, 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 chop. Now, it did enter in, come back out, and then fall through. But all in all, I feel like that was a good non-trade. You'd have had to been really quick to take profits on that one, and so I feel like that was a good non-trade. The Canadian breakout short is still running, so this is a good page for us, as we've got our bond trade short working out pretty well. The Aussie and the Canadian still running, and the Euro that we pulled the plug on that trade was the right decision. Great British Pound. So let's talk about our British Pound position. So the British Pound, we did get a little rally off of the British Pound level yesterday. So that one met entry and then boom, popped right back up. You got a nice 3-to-1 reward to risk out of this trade. And so this one worked for a very small time frame trade. Remember, if it's in purple, it's always going to be a lower probability trade, and you're going to take your profits a fair amount sooner. So this one did work out in our favor, and it's continuing to move down. I've really got nothing yet to add to this. I'm going to let this be for just a little bit. If I move to the 4-hour chart, you'll see that we're coming into some noise right through here, but I'm just going to leave all this noise be for now. The Japanese yen trade, however, not so much. That one did not work out for us, as I anticipated that you could get another entry on the short right from this area. If you missed the breakout, then it gave you another opportunity on the short, and that one failed miserably. Well, it didn't fail miserably, but it just didn't work out in our favor. You may or may not have gotten stopped out, maybe taken a little profit, but my guess is most of us got stopped out on this. And the Japanese yen is just showing relative strength to the rest of the currency markets. Whereas all the rest of them are continuing to fall, the Japanese yen is indeed rising pretty strongly. Our nat gas position, nat gas level, if you will, has not yet met entry. We call this nicked by a tick, right? It's still valid. We're still going to leave it here, but it did not quite meet entry on the opportunity. And then for copper, I don't really have anything set up at the moment, although I do like this itty bitty area right here. Oops, wrong color line. That's for breakout trades. And I don't know if many of you notice, I use green lines for hourly levels, green dashed line for confirmation entry on hourly levels, purple lines for 15-minute levels, purple dashed lines for confirmation entries on 15-minute levels, and blue lines for breakouts. So I've got a very specific way that I like to look at these different things. So this is a potential reversal in the copper futures market. So with that being said, I hope everybody has a great trading day today. Remember, always protect your capital. See you soon.